Dayrade Daily, let's go. Nike just went full rocket mode at 63 bucks and change. And my people, when volatility is like 412%, this is why you watch us live. We are breaking down NKE, the market move, and every scalpable inch of this circus. So smash like and subscribe before the sneaker rally steps on your stop.
Bro, NKE ripping like that means every sneakerhead cousin just became a technical analyst. They are sending me diagonal lines they call supply zones. They cannot even spell. Intraday, that gap is pure boss fight. So you either use tiny size or you donate your account to the shoe gods.
Relax, Goblin. NKE is spiking because earnings slapped expectations, and guidance did not sound like apocalypse for consumer spending. But when a big name is up 400+% on the day, you do not chase the first giant candle unless your hobby is voluntary pain.
From a boring macro lens, NKE is basically a sentiment barometer. Consumer cyclical strength plus bullish social chatter means momentum traders swarm anything that looks like a turnaround. If you trade that opening drive, you want pre-planned levels, and you absolutely trail risk instead of hero holding.
Exactly, Professor. But let me translate for my movement. NKE is the temple of athletic capitalism right now. And on Thursday, January 01, 2026, when the whole tape is spicy, you trade the first clean pullback to prior resistance. Then you bail the second it stops behaving like a champion.
Can we talk about how a sneaker stock with 412% volatility turned my heart rate into a meme? Chat is screaming YOLO calls, and I am just trying to scalp a tiny opening range breakout without blacking out on the 1-minute time frame.
Here is your cardiologist-friendly tip of the day. When average volatility is north of 400%, you shrink size and widen stops, or you do the emotional damage speed run. You do not revenge trade a sneaker gap like it insulted your childhood.
Speaking of childhood, this is literally my origin story. Flipping limited kicks in high school. And now I am watching NKE go nuclear while yelling on a podcast. If that is not character development, my people, I do not know what is. Also, tap like so we can afford Jet a therapist.
Structurally, NKE today is a textbook gap-and-go candidate. You have heavy pre-market volume, strong earnings messaging, and social media cheerleading. So my A setup is first pullback toward pre-market high, risk defined just beneath that, and partials scaled into exhaustion pushes, not random mid-candle clicks.
Translation: if the candle looks like a skyscraper, do not buy the roof. Wait for the elevator to at least hit a floor that existed before the news, or you are literally buying the after-party smoke machine.
Look at Jet doing risk management slam poetry. Somewhere a serious educator just got replaced by a bucket hat. But he is right. You avoid chasing extended breaks on a day when everyone is intoxicated by green candles and bullish sentiment.
Haha! A bucket hat alpha pays. And speaking of alpha, my forest-colored polo is practically glowing because overall sentiment is wild bullish today, my people. When the crowd is this optimistic, you either ride trend with discipline or stand aside and protect your mental account.
Also, extremely online traders have turned NKE into a temporary personality trait. Reddit threads frame this like a lifestyle choice rather than an earnings reaction. Whenever you see that kind of identity energy on a chart, you plan both breakout and mean reversion scenarios because narrative can flip intraday.
Identity energy is such a polite way to say people are losing their minds. My DMs are full of "I will never sell these calls," and I'm like, bro, that contract expires in 2 days. Please drink some water.
Quick practical joke tip, kids. If you say never selling about an option with a Friday expiry, the market will personally schedule your humility lesson. Risk small on lottery contracts, Or just watch the fireworks for free.
And while you watch those fireworks, hit the like button. It literally fuels jet caffeine budget. No likes, no espresso, no momentum scalps. It is basic market structure, my people. Support the liquidity of this show.
Bringing it back to actual trading for a second, NKE at this stage is stretched, but not guaranteed to fade. My plan into midday is watch for a failed high near morning resistance, and if volume dries up on pushes, that is where a tight risk short scalp actually makes sense.
You hear that, chat? He finally gave you a short idea. Somebody clip that. Orin allowing red candles is rarer than my full 8 hours of sleep.
Careful, Goblin, if he starts shorting fashion names, he might accidentally become cool. But for real, fading a monster like NKE only works if you wait for clear lower highs and confirmation. Guessing tops on a tape this wild is how you meet the margin department.
Do not scare my people with margin prison grizz. We operate on discipline and tiny test size starter positions at defined levels. Adds only when price actually proves you right. Otherwise, you are not trading. You are cosplaying a hedge fund blow-up documentary.
That is surprisingly sensible, Toro, given average volatility near 412% today. My own rule is cut position size to maybe a third of normal and wait for patterns to complete. Noise looks like signal when candles are this huge and adrenalized.
Huge and adrenalized is also how my doctor described me last visit. He literally said, maybe do not mainline volatility and espresso at the same time. And I was like, cool, I will just stagger them a few minutes apart.
That man is a walking red flag with a trading account, but at least he tells you the truth. If Jet admits something is too wild for full size, you treat it like a natural disaster and trade the edges only.
Speaking of disasters, can we acknowledge social feeds turning NKE into a lifestyle quiz? People are posting, which shoe colorway are you? Instead of asking where their stop loss is. My people use that distraction. You wait for their FOMO breakout to stall. Then, you politely take the reversal money.
Just remember, intraday, you do not need to catch every single wiggle. Pick one or two high-quality setups on NKE and ignore the rest. Overtrading a hot ticker during bullish mania is like drinking from a fire hose while trying to solve calculus.
Okay, but quick derail, because I just imagine NKE launching a limited shoe that only unlocks if your brokerage confirms 5 profitable day trades in a row. That sneaker would literally never ship to my address.
That drop would have a total circulation of about 12 pairs. All right, derailment over. Back to reality. The only unlock you need is remembering to like and subscribe, so you have someone to blame when you ignore our risk warnings.
Lightning round time. My people bowl sneaker prophecy hour. NKE keeps this kind of run, and we are naming chart patterns after shoes, like the triple lace breakout and the swoosh reclaim setup.
My call NKE becomes first talk, where earnings calls are just sneaker unboxing live streams. No guidance, just someone opening boxes, and the implied volatility reacts in real time like a hypersensitive mood ring.
I will go darker. NKE goes so vertical that regulators start checking sneakers for hidden prospectuses. You buy a fresh pair, and instead of extra laces, you get a risk disclosure about parabolic intraday action.
My unrealistic scenario. NKE volatility becomes so important that central bankers reference it in speeches. Imagine a policy update that literally says, we are watching employment, inflation, and intraday sneaker gamma before adjusting rates. I would frame that screenshot forever.
Final prophecy from the hype prophet NKE. becomes a full-on trading religion. Sunday services, where we analyze the weekly chart and pass the offering plate for risk capital while chanting, respect your stop.
If that happens, I am volunteering as court jester risk officer. Every time someone chases a 500% gap, I just ring a bell and yell size smaller, you beautiful maniac.
All right, cult of NKE, before we all convert to sneaker maximalism. Remember, trade the levels, not the hype. Respect this insane 412% volatility. And we will see you on the next Dayrade Daily, preferably with your account still intact. So like, subscribe, and bring a friend who needs a stop-loss intervention.